Hey all, welcome to ShareTrek. This is Raj here. This is our new Genomics segment, post-market session. The markets closed off with a narrow trading range today. So first we are going to look at the indices and the indicators, and then we'll go and look at the genomic stocks and take a rundown of what happened today and what to anticipate tomorrow. So with that said, let's get started. Welcome back, friends. The market was very range bound today. Let's look at S&P 500 first. As you can see here, S&P 500 had a very narrow trading range, and I'm just going to increase the size of this chart and recalibrate so that I can show you clearly what has happened out here. See, this was our line of resistance which we wanted to break today, 5779.03. We were unable to break it. We pierced it and we were pushed back nicely. And the whole day there was a tug of war. We keep on hitting at this line of resistance and keep on getting pushed back down. And also we came down and tried to go down, but this 20-day exponential moving average wouldn't allow the price point to go down on the S&P 500 today. So as a result, we have a doji candle with a very narrow body and almost equidistant wick on both sides. So it's very difficult to say it's an indecision kind of candle, basically because there is uncertainty in the market. Yesterday, people are all enthused that Trump is going to be very focused on his tariffs. But this morning, we got the news about Venezuela. Trump says that if any country buys oil from Venezuela, then they will attract a 25% tariff. So those kind of talks have put a pause out here. Maybe tomorrow we may have something from the White House which can change this whole dynamic and we could go up again. So at this point of time, I think as retail investors, we have to be more reactive than predictive. So we should not predict anything. We just watch, and if we get an opportunity, we should capitalize on it. So in that spirit, today, whichever stocks I'm going to look at, I'm going to talk about the possibilities and how one can take advantage in the eventuality of prices going up or prices going down. That's going to be my effort. So with that said, where are we left with at the end of the day with S&P 500? Nowhere exactly where we were yesterday, but in a slightly better position because we opened above yesterday's close and we closed above yesterday's close. That's why we have a gain of 0.16%. So to that extent, we have made progress. Also, MACD is still bullish, so that's a good point. Momentum is flat and it's average. It's as Goldilocks as it can get. So it's a neutral kind of a situation. It's a status quo. Nothing much has changed from yesterday to today, except that we are slightly better off today than we were yesterday in the sense of the price level at which S&P ended, but otherwise nothing much to write home about. Next, let's look at Nasdaq. Nasdaq did well because it not only opened up above yesterday's close, but it also closed way above where it opened, creating a nice green candle. It attempted to go down once, but was firmly pushed up by the 20-day exponential moving average, which is sitting at 20,168.00. And there was no looking back for Nasdaq. So Nasdaq, I think, did extremely well. MACD is also bullish. And on top of it, we have a momentum which has just about touched average. So Nasdaq can go to higher level from here tomorrow. So if Nasdaq were to improve, what is going to happen is that it's going to challenge the 50-day exponential moving average, which is this blue line out here, the fluorescent blue line that you see. And that is sitting at 20,629.91. And that is the most likely possibility tomorrow. However, if something happens between now and the market open tomorrow and the markets turn around, I think they're going to get a very strong support from the 20-day exponential, which is sitting at 20,168.00. And if it breaks down from there, it still has got a very strong support from the 200-day exponential moving average, which is sitting at 20,103.21. These are the only possibilities I see for Nasdaq for tomorrow. Likewise, let me do the same for S&P 500. So for S&P 500, there are a bunch of possibilities that could happen. If we continue the way we are, tomorrow I am thinking that one possibility is that we break out above this horizontal line of support, in which case horizontal line of resistance, in which case this will become a line of support. And we would then be targeting a resistance of 5841, so 5841.29. That will be our target. However, if we were not able to break through this, and if we started coming down, our support is going to be the 20-day exponential moving average, which is sitting at 5751.99. So that's the support that we are looking at. So ideally, we're going to have these two ranges, assuming the very narrow range in which we traded today. I'm thinking these two ranges are sufficient for tomorrow. However, if something changes between now and tomorrow, before the market open or at the market open, I think then we have more possibilities that open up. For example, if we drop below this 20-day exponential moving average, then we have got a support out here, which is this diagonal line of resistance, diagonal line of support. And I think it's going to be sitting somewhere around 5702.42. And it will also indicate that probably we are creating a new higher low for this index, because if you look at this diagonal line we drew here, it was within this bear channel context, but it was tracking higher lows. So we may be moving towards creating a new higher low and then another higher high. So the bull context is still not gone. At the same time, the bear possibilities are still existing. They are not comprehensively written off. Now, the dangerous thing out here for S&P 500 is that if this turned out to be a bear flag, and if we break down on the bottom of this diagonal line of support, then we have potential to fall almost 10%. So that's the danger out there we have to be careful about. And right now, it's very difficult to predict what's going to happen. Even in the best of time, it's difficult to predict, but there could be a tweet or a thread or a truth from Trump and or maybe somebody from his administration, and we could see a different market dynamic. So be very careful. Next, let us have a look at VIX. VIX has been getting tamer and tamer and tamer, which is good for the market. In case of the stock prices, it's going to be very helpful. And if you look at put call ratio, I would still say that it is bullish at 0.789. So I think that at least the put call ratio is giving us a little bullish sentiment out there. And if I look at gold is up 0.06%. It is continuously testing this 9-day exponential moving average, the red line that you see out here. So until it bounces off from there, we have to assume that it's going to straddle this red line, because that's what it has done continuously. It has always been very close to this 9-day exponential moving average. That has been the nature of gold. But if it breaks down below this 9-day exponential moving average, then we have to look at the 20-day exponential to give it the support. At this point of time, I think gold is going to go from strength to strength in the medium to long term. And I want to take a quick look at XLP, which is continuing to go down. I had kind of imagined that we would probably form a reverse head and shoulder pattern, which will be very bullish in case of any recession or stagflation kind of a situation. So I'm going to keep on tracking this for a while. But having said that, I think I would like to give you a little bit more insight. What's happening in the background is that we have got credit card loans which have high interest rates. They are piling up. And now with the demolition of Department of Education, the student loans, the forgiveness and other things have stopped. And people who were supposed to pay their student loans and who had a holiday are supposed to start paying back again. And if they don't pay back, then it will be reported to the credit bureau. And if they are reported to the credit bureau, then they may not be able to get financing for things like buying a car or buying a house or something like that. So those kind of big ticket sales will all get a bit sluggish because of the weakening consumer credit situation. So that's the possibility out there. And of course, we have to see the back end of all the layoffs that have happened in the public sector because of DOGE's activity. And there's another big news, which is probably going to impact companies like Illumina in our watch list, Illumina and PACB, because funding for HIV research and research on infectious disease has been cut. So universities and others who have been receiving those kind of funding, there are reports that they have received information that funding is going to be cut, and the cut is more pronounced on areas which have keywords like diversity or any sex other than male and female. So those categories, which Doge was very clear about, they're going to look at those kind of things. So the hardest hit is HIV, for that matter, because it is in the intersection of all the terms that Doge and the new administration is looking at. Now, all those monies which are going out of the research, they are going to suck up the demand. They're going to reduce the demand for consumables and genomic sequencing instruments and lab technology, where they do lab calibration or testing blood and things like that. All those things are going to be dialed down a lot. So all those dampers are still there in the market. And also we have to look at the housing sector with higher interest rates. How long can housing sector manage to stay afloat? So we'll have to watch the new home builders and all. So those are all the other underpinnings which are not that good. And of course, we still have geopolitical situations, and tariffs are not yet gone. April 2 is the day of reckoning and the day of freedom or liberation. And we will see what happens on that day. But from my perspective, I'm trying to get more cash. I'm booking profits wherever I can. And I've reduced a little bit of my shorts today. So that's my situation. And with that said, I'd like to go to the genomics and without further delay, give you my thoughts about what's happening with the genomic stocks that we have. The only company that did well today was Verve. It notched a gain of 1.04%, and it's still riding this bear channel. It's riding this diagonal line of support of a bear channel, but it is done way better than all the other shares today. So it's the hero for today. And again, for the second straight day, it has been constrained by the 9-day exponential moving average sitting at 5.88. Yesterday as well as today, we pierced through it, but we were swiftly pushed back down. So there is a little bit of appetite for the price to go up, but it's not strong enough to break the 9-day exponential moving average. And when I look at the MACD, it is mending up a lot. It has improved a lot today. And hopefully tomorrow it could do a little better and become bullish. So that will be one step which will get positive if that happens. But we still have momentum which is weak. And the reason why momentum is weak, because these are not profitable companies. These are all cutting edge companies. These are all risk on companies where there's a lot of risk. And at this point of time, investors are very averse to risk, and therefore the momentum for all these stocks is likely to be very low. Unless they have a catalyst that comes up, like for example, if CRISPR Therapeutics came up and said that FDA has approved, or that FDA has said that BLA has got to be, BLA date has been fixed for, let us say, CTX211, yeah, then there'll be a spurt and there'll be a lot of interest and people will come in. But that jump will be short-lived because the overall market conditions will push it back after a day or two. This is the nature of the market, in my opinion. So please keep that at the back of your mind. Let us look at Ginkgo Bioworks. The horizontal line of resistance, which we drew earlier, has proved to be extremely strong. It was a minor resistance, but now I'm considering it to be a strong resistance because it has got multiple points of interaction with the price and it has constantly pushed it down. Our MACD, which was very bullish, is now a little less bullish, and I think the momentum is also faltering a little bit. As far as Ginkgo Bioworks is concerned, I've had my doubts about Ginkgo Bioworks. It sounds too good to be true. But the reverse split gave it a lot of legitimacy, and people who are not familiar with the history of Ginkgo Bioworks, if they look at a share price of $7.12, it definitely looks much superior to something like Iowa or Editas or IMTX, and for that matter, even PACB. But those of you who have seen what Ginkgo Bioworks was and how much it had dropped, and who had witnessed the reverse split, you will then realize that it has already lost a lot of value since the reverse split. So things are not looking that great for Ginkgo Bioworks. And again, today it dropped 7.5%. So that's a big drop. Chart is looking very weak. Then we have Caribou Biosciences, which dropped 5.84%, and it's still in the bear channel. and it continues to be there. Chart is immensely weak. CRISPR Therapeutics managed to stay above this minor line of support, which again is becoming a very strong line of support because it got pushed up. It came here, it touched the line, and it was pushed back up again. And on the upside, it was pushed down by the 20-day exponential moving average, and then it came down. So it opened up higher during the day, got pushed down by the 20-day exponential moving average, came down and tried to drop below this horizontal line of support, but it was immediately pushed up. So it has got a very small wick out here. That's where it got pushed up, and it closed above this line of support. So it will be interesting to see tomorrow if this line of support is going to hold or not. And however, if it did not hold, then we have the next line of support, which is going to be at 39.62, and that should give it some support. And why is it a support? Yeah, it's a support because we have a gap up out here, and the top of the gap up is one support line, and the bottom of the gap up is another support line. So I'm thinking that this could be a support because the gap fill has to happen. And when the gap fill happens, it's going to try to bounce back from here, and then it will have to break through this line of resistance in case it comes down. However, if tomorrow it was to bounce up from here, then we have a resistance at 42.84, which is going to be formidable because it is going to coincide with the 20-day exponential moving average, which is sitting at 42.70. So both of them together will create a hard ceiling, and the intermediate resistance for it is the 9-day exponential, which is a red line that you see here, and that is sitting at 41.91. So CRISPR Therapeutics is facing a whole lot of headwinds. It's a good company, please don't get me wrong, but the environment is bad, and that's the reason why it's languishing a little bit. Grail has bravely broken out of the bear channel, and today I would assume that it has created a new higher low. That's what I'm going to assume unless I'm proved wrong. And one of the things that stands out to me is that the 20-day exponential has been very strong. For the last 2 days, it has been pushing us down. And yesterday, the 50-day exponential was able to support the price, but today it has thrown in the towel and given up. It has said, okay, Grail, if you really want to go down, I can't stop you. And then that's where our good friend, the 9-day exponential, the red line out here, the red wavy line, the 9-day exponential sitting at 30.56 swung into action, pushed it back up again. So tomorrow, if we are able to break through the 9-day exponential, I think then we are going to have a big fall, which is going to be very painful. However, if we were able to use the traction given by the 9-day exponential, then we'll be challenging a resistance of 31.95, which is going to be a strong resistance because it's going to be very close to the 20-day exponential of 32.40, which is also going to give a big resistance to Grail. So Grail has got heavy headwinds. MACD and momentum are not looking that great as yet. So it's anybody's guess what's going to happen to Grail. If the overall market is in a funk, I think none of the genomic stocks are going to be able to do as well as maybe what Verve did today. And then we look at Prime, which has again fallen back below the diagonal line of support of the bear channel. So I marked it red as a resistance. Chart, I think MACD improved as we started moving upward, but it couldn't give enough power for it to stay above this diagonal line of support. So that's where we are. Right now the chart is looking quite weak. And if you look at Beam Therapeutics, Beam lost around 3.29% today, and it was pushed down by the 9-day exponential moving average, which will continue to be a resistance for it tomorrow as well. However, if you were to look at a support in the bottom, I would say that there is a minor support out here. I'm just drawing this line here as a placeholder. It's a minor support because it has got multiple touch points. So I would put it somewhere out here. And it's not a very formidable support. We can actually break down below it, but I'm hoping that if it gives support for tomorrow, then it can slowly become stronger and stronger, like the support that we saw for CRISPR Therapeutics. So we'll have a floor at the bottom, and that can help us out. And also I'm thinking that if we were able to go up further, we will be averting a big problem, because to a certain extent, this would look like a head and shoulder pattern, and head and shoulders are very bearish, and I don't want Beam to fall too much. So I would be very keen to see that tomorrow we start moving upwards and invalidate this potential reverse head and shoulder pattern out here. So having said that, let's look at Altimmune. Altimmune has created a bearish candle pattern out here. This is called as the bearish harami candle pattern from the Japanese candlestick patterns. It's always it's more or less it's supposed to be bearish, especially if it is just under a line of resistance. But in this case, it's above two supports that we have: a 9-day exponential support and a 20-day exponential support. The 9-day is at 5.82 and the 20-day is at 5.90. We are just below that 5.90 at 5.89, so it's just a little bit below. But overall, because of the proximity of the support, I think that the chances of this bearish harami manifesting itself is a little reduced. So I wouldn't hold too much onto it. The MACD is decent. It's still bullish. Momentum is moving in the wrong direction. It's just below average. So I'll still hold out a little hope based on the potential cup and handle pattern that I can imagine. And then I'm looking at Bluebird Bio, which is just trying to survive and meandering along that line of support. And Allogene also has dropped today. It's below all the exponential moving averages, and 9-day exponential is the main resistance for it. And the best support that it has got tomorrow is 1.53, because this diagonal line of support of the bear channel is going to make sure that it doesn't fall below somewhere around 1.54 or 1.52, something in that range. That will be the support for tomorrow. And the resistance for tomorrow is going to be the resistance of the 9-day exponential at 1.73. And then we look at mRNA. mRNA had this double bottom, which I thought would probably push it up, but unfortunately that failed. And now what we have here is a double top possibility, and that also failed because we have this movement upwards instead of coming down and completing the double bottom. So I'm absolutely relieved by that, because otherwise we would have seen a huge drop out there. So now the chances for us is, the possibility is that we would find a resistance at 35.38 in case we went up tomorrow. In case we were unable to hold on to the support of the 9-day exponential, which is sitting at 33.69, and the 20-day exponential, which is sitting at 33.90, we are likely to fall down. So that's the problem that I'm visualizing out here. And if we fell down, we have a long way to go. The next support happens to be at 29.71, and we could travel the whole distance in one day or multiple days, but that is the direction which it would go. ARCG has managed to find support on the 9-day exponential, and it has managed to stay above the 9-day exponential, but in the process it has converted the 20-day exponential into a resistance for itself. MACD is bullish, but momentum is still very weak, and thus momentum becomes above average. I won't have much confidence in ARCG as such. And Pacific Biosciences is down 1.50%. It is still managing to stay between the 9-day and the 20-day exponential moving average, exactly the way it was yesterday, but there was a slightly larger range of trading volume. So we have a doji candle, again indecision. The market doesn't know what to do with PACB. Momentum is also not that great, but MACD is bullish, so that's the positive factor I can see there. Intelia is continuing to travel on its way down, and its support for tomorrow is going to be somewhere around I would say $8.22. So that will be the support for Intelia. And then you look at Illumina. I'm really liking what Illumina is doing. From the fundamental perspective, Illumina has worked out plans to save $100 million in cash expenditure. So it's going to cut its cost by $100 million. So that's going to be a positive to offset what happens with it in China. And also we still have the potential on April 2nd, probably President Trump might come up with some compromise solution with China, which could enable China to let go of Illumina, in which case we are standing ready to bounce back up. So I'm thinking that we are going to straddle this area of resistance, and potentially we could even spend a few days inside this area of resistance, just above the 20-day exponential moving average. That's a distinct possibility, because MACD is continuing to improve very well. We just need the momentum to pick up. We need more interest in Illumina, and I'm hoping that as long as we continue trying to break above the 20-day exponential and to break into this area of supply, I think I would be optimistic. And then I'm looking at IMTX, which is down 6.40%. And IMTX had a very bad day today. It has violated the diagonal line of support that we had on one side, and the diagonal line of support that we had on the other side. This side I have already marked red, and this side I'm going to mark red now. It was a very strong support in my opinion. The fact that IMTX broke down below this speaks volumes. It means that IMTX is not in a good place. So tomorrow I would probably expect it to fall further because it's below all the exponential moving averages. The only thing that can stop it is 4.17, which is the horizontal line of resistance. It could be a one-day drop or multiple day drop. The only way in which it can save itself is by going back up again above this diagonal line of support. And that can happen only if there is a big catalyst like some good news by tomorrow. I don't know if there is any news that is coming in. And also the earnings that we had here, which came in today, they were not that good. The EPS was below expectation by 1.18%, and that's the part that has been allowing the markets to come down. And because this has been a response to the EPS, I hold out the possibility that it was an overreaction, and I wouldn't be surprised if tomorrow we open above this diagonal line of support out here, somewhere on top of the diagonal line of support at say 4.80. I wouldn't be surprised if that happened. That will give IMTX a fighting chance to stay on top of this diagonal line of support and slowly build up on its way up as the market digests the news that they got from IMTX. Next, let us look at Editas. Editas was down 6.47% today. And it seems to be having some kind of a minor support out here. For the last 2 days, I think we have been staying above this line of support. Just going to make this line thinner so that we can be a little bit more precise with our positioning of the line. So this is where I put the line, and the line is on 1.29, and 1.29 has performed the role of support for 2 days in a row. I would actually say 3 days in a row, and we are being pushed down by the 9-day exponential moving average. So the story for tomorrow is going to be that we are most likely going to convert this line of support into a resistance. And if that happens, then I think we'll find more support somewhere around 1.17. I'm not going to draw it yet. I'll draw it tomorrow in case we break down. I don't want to jinx this. However, if we are able to bounce back up from this line of support, then the 9-day exponential at 1.40 becomes a resistance. Then if you look at Iowa has fallen below this diagonal line of support, and I'm going to mark this red. Now it has become a diagonal line of resistance, and that's going to be constraining Iowa going forward. So tomorrow, if we are not able to break up above this diagonal line of support, I think we are on a free fall, and I don't see any other lines of resistance out here in the history. We are going to create new record lows, and we look at Unicure. The story is still intact because we created a red candle today. We are down 2.78%, but still we are above this diagonal line of support from yesterday that I drew yesterday, and that is giving us support. I think we have retested this line of support, so I would be very happy to see Unicure bounce up tomorrow and try to meet our target of 20.24. And in case we fail that and if we fall below this diagonal line of support, then I think we are going to have to depend on the 9-day exponential, which is sitting at 13.92, to provide the first line of support, and the 20-day at 13.52, and then the 50-day at 13.35. So there's a whole lot of support. Imagine that, like a lot of hands trying to reach out so that the price which is falling can be caught. So one of them will definitely catch it and push it back up like it did yesterday. Yesterday we had bounced up through all of these candles, through all of these exponential moving average, as you can see in the wick out here. Same thing could happen tomorrow, and we should still be safe. That's what I'm hoping. And Vertex continues to be on the bull channel. It's continuing to move upwards. We lost 0.53% yesterday. It's consolidating. This is like a bull flag out here. If it breaks out, then I think it'll move another 5% or something upwards. So I think Vertex is in a good position overall. So my friends, that's what I have here for you guys today. And I think this should be the best that I can do at this point of time, given how dynamic the market position is, how fluid the situation is. There is a fighting going on again in the Middle East. So all those things are not in the news at this point of time. We are looking at the latest shiny object is the leaked text messages about the Yemen strike. So that is kind of camouflaging the other things, but I have spoken about those serious issues that we are looking at. Credit card delinquency, which is more than $1 trillion, like credit card debts are more than $1 trillion plus. And if there are delinquencies out there, that could have an impact. Automobile loans, repositioning of automobiles is also happening. So there'll be that problem. That's again more than $1 trillion market. And of course, the students have to start paying back their student loans. If they do not, then they'll be reported to the credit bureau, and that can weaken their credit rating and thereby dampen the consumer credit worthiness and therefore demand. So it's looking dicey, and plus the Fed doesn't seem to be clear what's happening. They're going to be in a wait and watch mode to see if we are going to get a recession or stagflation. So this is the background in which we are operating. So it's very difficult. Even in the best of times, technical analysis is not always a slam dunk. So at this point of time, please be reactive rather than trying to take a risk. And if you're going to buy something, buy very close to the support. And if you're going to short something, short closer to the resistance. That's what I would say. Again, this is my personal opinion, not financial advice. So keep that in mind. And I wish you all the very best. And I'll catch up again with you in the live stream tomorrow morning at 7:45 a.m. Eastern Time. Please join me there. We'll have lots of fun. Thanks and have a great day. Bye for now.